Hello, everybody. Green Effect Podcast, Season 6, Episode 8. No shortage of stuff to talk about. We have a buffet of news and information. So, I'm going to try this podcast to really break things down a little bit and let you know what's happening. And the weird thing about the world right now, things are changing by the day or maybe by the week. So if I can come to you with some updates as to what's going on, just stay tuned, right? But make sure you check my podcast every other week just to see what the newest thing is. And of course, on social media as well, because I think there's a lot of stuff being talked about right now, but trying to nail down what's actually happening and what the right news is tough, right? We know that. That's the beast of social media, but just trying to stay on top of it is sometimes a definite challenge. So, okay, so let's just start right off with what's going on with the Iran war. Is it officially the Iran war? Iran? Is it Iran or Iran? I'm not even sure. But let's talk about that part to start and what this means. So, listen, there's no shock here. It's pretty straightforward as to what this actually does mean. Yes, they have reduced the amount of oil production. And listen, I'm not an economist. I'm not an economist. So if I don't use the right words here and there, for the most part, you probably know what I mean. Feel free to correct me in the comments. I'm cool with that because again, I'm not an economist or I don't have an economy degree or whatever. I'm just a bit of a mortgage nerd trying to figure the world out a little bit. Anyway, basically what Iran has done is they have closed off a major artery for oil to be transported. We all know what that is. Okay, the Strait of, I'm going to pronounce it wrong. I'm sorry. Hermuz, I believe it is. I'm sorry. I might not be pronouncing it properly. Anyway, 20% of the world's oil has now been restricted. So a lot of people are asking, well, okay, obviously we see gas prices spiking, right? We definitely see that, but we're Canadian. We have a ton of oil. Why is it spiking? What the heck is going on? And the reason why gas around the world is spiking, even though it's only 20% of the oil that's no longer shipping, from my understanding, is you have an asset, okay, or a resource like oil, gas, and yes, it's only down 20%, but that means just the overall supply is down. And if you think about it, it's not only 20%, it's 20% for the world. So when you have that much of a reduction, the supply is down, supply and demand, the price has to go up. And I'm not sure if you're noticing, but we all don't have electric cars just yet. So isn't it funny? Like, are the electric car people kind of like, haha, told you this day was coming? I'm like, I still probably wouldn't buy an electric car, but are they not sitting back saying, haha, ha ha ha? Yeah, we knew this was coming and here we are. So anyway, that's fuel prices, right? And here's the problem with this. It's not just that your gas is increasing in cost. That's not the only isolated issue. You got to remember the domino effect just begins. So if your fuel is expensive, it's not just your car, it's airplanes for flights, it's tractor trailers moving your food. It's everything. Like the world runs on fuel. So if the price is going up, it's like anything else. They're not going to say, "Hey, no big deal. We'll just absorb the extra cost." No, they're going to pass it on to the consumer. Well, what does that mean? That means inflation. So what is probably going to happen, and now we're going to evolve into, what's happened with rates and the market. All right, well, listen, if inflation is going to increase, and we don't know yet, March results are going to be super interesting. If inflation is increasing, that means we've got the Bank of Canada who now, instead of all of our predictions of rates probably not going up in 2026 or maybe a drop, we could see increases on the prime lending rate. Because remember, Bank of Canada's got one job, it's to control inflation. Inflation goes up, they need to increase the rate, the prime lending rate, to bring inflation down and slow spending. On the flip side, we've got fixed rates. So fixed rates have been crazy. Okay. I think, I'm not sure in episode 7 if I talked about what we were busy doing, but we have been very busy trying to get people to lock in and listen to us and freaking lock something in. So bond yields have spiked. They've gone up. They have not really come back down. They're above 3%. Why do you care? You care because that's where the banks get their fixed rate money. And so with the bond prices increasing, the rates go with it. We've seen a 0.8 total increase like in the last 6 weeks. Was it last weekend or the weekend before? I am seriously losing track of time. I was on the phone getting customers in for Sunday morning appointments, Saturday morning appointments, saying, lock your rate, guys, lock your rate. Because here's the thing, and brokers can do this. A lot of banks can't do this. If we lock a rate and the rate comes down, we go in and we try to get the lower rate. When I say try, we pretty much always get the lower rate. Or or on the flip side, if rates go up, you're protected. You're golden. I had clients I met with 2 weeks ago who didn't lock in, didn't get back to me, wasn't sure what they wanted to do. They came back to me now to finish up their pre-approval or their renewal or whatever, and their rate's just higher. That's it. End of story. And I don't think I'm just going to digress a little bit on rates. So that's kind of what's happening with rates and the impact from the war overseas. But I made this comment on social media this week. I don't think people are I don't think people are just not wanting to. I don't think people are being difficult. I think a lot of people right now are overwhelmed, very overwhelmed, right? They think that there's a better deal coming or a wait and see, and it's costing people thousands of dollars. So, I mean, listen, if you're looking around for options and rates and whatever else, listen, make some quick decisions, lock something in. It's not a final commitment, right? Protect yourself, right? We have a ton of mortgages renewing this year, like 1 million something. Like, it's a lot of mortgages. We can lock rates in for you. Not all lenders allow rate locks, and that's okay. But we can lock rates with some lenders. There's nothing wrong with that. So just be aware of that. In a moving rate environment like we have right now, don't hesitate. Reach out to a mortgage professional. And I make this next comment not to be, a self-promoting, but folks, make sure you reach out to a mortgage broker or agent who knows what the hell they're doing to give the right advice. I'm sorry. I have banks just launching rates at clients and hoping for the best. What's the term? Throw shit against the wall and hope it sticks. That's what banks are doing right now on renewals. It's insane. No rhyme or reason. I had one client take a rate on a renewal from a bank. It made no sense. It didn't even fit anything within their profile. I'm like, all right, do what you got to do. Fine. It's cool. Right. And that's okay, I guess. But reach out to a mortgage broker, a mortgage agent, get some advice, make sure they know what the hell they're talking about, and lock something in. Like, I don't get it. I don't get it. I don't get it. I'm not understanding. I know clients are overwhelmed, but waiting around and hoping for the best, it's not good. It's not good. So anyway, just letting you know, we definitely see that quite a bit right now. Okay, moving on. Again, this is just going to be like rapid fire news and information. So and you're going to see, again, people who are watching me on YouTube, you're going to see my head kind of swivel a little bit here. So Bank of Canada, okay, let's just talk about those nice folks. They meet in April. Obviously, is there an April meet? There's an April meet. I believe it's the end of April they meet. It'll be interesting. Got to read the comments, see what Tiffy and Carolyn say. I need a term for them. I got Tiffy boy, but Carolyn Rogers is talking a lot more. Tiffy boy and Rogers. Carolyn and Tiff. Tiff and Tiff. What do you call it when you combine them? Tiff, Macklin, Carolyn, Macklin Rogers. Mac Roger. The Mac Roger. The Mac Roger. Yeah, that makes sense. The Mac Roger team. Roger Mac. Roger Mac. Anyone who grew up in the 90s, right? Crisscross. Roger Mac will make you jump. Yikes. All right, let's get back to the topic here. Bank of Canada risk management. All right. So when Roger Mac gets up, see what I did there? It'll be interesting to see what their outlook is on the economy. I think they're going to be throwing out warnings like no one's business. I just think it's going out there. They're going to be like, hey, watch out what's happening. Probably going to see some movement in rates later on. But my guess is they're just going to monitor things because you just don't know yet. They got to wait for all the data to come in before they really jump. Because we know inflation is going to go up. Of course it is. Food and fuel, period. End of story. Right? And again, that's their only job is inflation. Okay. That's rates. Now, let's now change. Oh, sorry. Can I come back to one more thing on rates before I go away from there? Variable versus fixed. I want to talk about this because this worries me a little bit. Yes, variable rates right now as we speak are lower than fixed. Guessing prime minus 0.75, so prime is 4.45 as of today. Prime minus 0.75, 0.3, like it's still minus for the most part. And remember, variable does go prime plus. We had prime plus in 2019, 2018, 2019. I remember we were doing mortgages at prime plus 0.25. That happens. It doesn't always go negative. So on the variable side of things, where I'm worried is some people will jump on the variable bandwagon just because the rate is lower. Now, I've heard strategies. We'll just take the variable and lock in later. Okay, sure. Assuming the fixed rates are still going to be lower. Because remember, if you got a variable offer right now at, I'll make up rates, 3.75, and you got a current fixed rate at 4.35, when you decide to lock in that variable rate, you don't get the 4.35 you started with that you could have had. It's whatever the fixed rates are at the time. So it's all fun and games. You can take the variable and roll the dice to lock into a fix, but you better hope the fixed rates are still lower when you go to do it. If we've learned our lesson from 2021, I think I've said this on the last episode, people could have had 1.7% on a fixed or 1.6. They took the 1.35 variable because variable never goes up. They all learned their lesson. Present company included. Don't get greedy. Don't get greedy. So lots of strategies, and I think I mentioned that earlier in the podcast where we got people making kind of decisions that maybe it's not the best fit for them. That's one of them. That's one of them. The one client I mentioned that took that other rate, they shouldn't. It's too risky. They can't afford the risk. So yeah, great. Take a variable, lower rate for now. But if the thought is to lock in, there's risk. There's risk there, folks. It is what it is. So be careful. Fixed versus variable. This is where I also, if I can bring this full circle and then hopefully we can move on away from rates. Having a proper mortgage broker, agent, a professional, not just a bank launching rates at you. This is where this comes in. Maybe the best option is fixed based on financial maturity, financial life stage, amount of debt. income, risk, like the list goes on. Don't just take a rate the bank just launches at you. Get some advice. And it worries me. This worries me. Anyway, there's not much more, was it lead a horse to water but you can't make it drink? Yeah, but it can trip and fall and kill itself on the way to the water. I just made that up right now. All right, moving on. Okay. I'm going to touch on the HST and the new builds. And I'll be honest, it's a fantastic headline for those of you who don't know. The feds, in partnership with the Ontario government, this is Ontario only, for 1 year only, is saying no HST on new builds to be purchased. And I believe it's only for owner occupied, principal residence. Okay. That sounds fantastic. In talking to some industry people, they don't really know how this is going to work. like, because generally the HST is included with the purchase price, and then the builder gets the money back, the HST rebate, but sometimes it's not included in the purchase price. And I'm only talking owner occupied folks. That's it. Okay. Are all of a sudden, as of April 1st, irony of April Fool's Day, are all the new build prices now 13% less? I don't think anybody saw that. There's a lot of confusion on who gets the rebate. Does the buyer pay for it and they get the rebate? Does the builder pay for it and they get the rebate? So there's a lot more to come. Not every builder right now has reduced their price by 13% that I know of. Correct me if I'm wrong. Drop it in the comments if anyone has gone from $1 million home to 870,000 roughly, right? Yeah, it's super weird. I think it's a great idea. We got a couple of issues though I want to make sure you're aware of with this HST rebate. Remember, it's not to increase affordability and sell more new homes. It's to kickstart the economy around everything relative to new builds. If you are not new to this podcast and my social media, we talk about a couple of critical stats every month, sometimes more. Single family housing building permits are almost non-existent. The builders have stopped building. They're like, why the hell should we even bother? Right? So that has stalled. The problem when that stalls, now we got municipalities not collecting HST. Now we have tradespeople not working. That's unemployment issues. They got to kickstart this and kickstart it fast. Now, I don't know who they're going to sell to because we are now declining in population. Well, that's a whole other problem. Now, the other thing we have to be very, very aware of that could happen, not sure if it will, but it could happen. If you got $1 million brand new home and $1 million resale home, and all of a sudden tomorrow the brand new home is $870,000, what the hell happens to the purchase price of the resale? Arguably, sometimes resale homes are built better. Not going down that road too far, but I'm just saying, right? A 50-year-old home was built in a different time and era. Yeah, okay, it might be a little bit better, fine, whatever, but we're talking about comparable sold properties. And so this means the resale market is going to have to come down to match it. But again, I don't know if just all of a sudden we're going to see prices drop 13%. I did hear of one builder who increased their price but dropped it a little bit, but they're still making more money off the back of the HST rebate. Time will tell. But this is a big problem, a massive problem, if that continues, because we all know we got some challenges in the resale market. Whew. The other thing too, just very, very small side note, a lot of people think, I heard this from a couple of people, I get $130,000 back. That's it. I'm going to get $130,000 back. Okay, but the house you're buying is $500,000. That's not 13% of 500,000. People think just getting 100 because that was the example given, right? Up to 130,000. And I think once you go over the million, it's scaled a little bit. It's tiered, but everyone's like, I'm getting 130,000 back. Easy. You're not getting 130,000 back. That's not how it works unless you're buying for that $1 million price point. Okay, HST, rebate, refund, whatever, more to come because we don't know exactly how it's going to be implemented. All right. Okay. Again, no shortage of stuff to talk about. Yikes. Okay. I want to talk about who the hell's buying homes right now. Okay. Let me tell if you're selling or buying, this is might be one of the most important parts of this whole podcast. So, yes, we are in a buyer's market. That means there's more inventory to buy and there's less buyers to buy the inventory, supply and demand. All right, there's more supply than demand. Kind of. December, January, February, in talking to many real estate agent partners of mine, people were just pricing the house what it was worth. We'd have the odd kind of 10 offers, whatever, but people were generally buying the house for what it was listed at, which a lot of agents took the listing price and listed at what the true market value was. It went for maybe, a little bit over asking, a little bit under asking, but no one freaked out, whatever. And again, there were some anomalies for sure. Well, here's what's now happened over the last month and a bit. I'm hearing from agents, oh, we had 30 offers, we had 10 offers, we had 5, we had 35. Just insanity. What we're seeing from real estate agents, love to hear from some realtors if they're seeing something different or they're seeing the same thing or what you're doing. Agents are starting to price lower than true market value. Remember, the listing price is, for lack of a better term, for the most part, a marketing number. Okay. How can we market this property to get the maximum amount for my client who's the seller? We're seeing realtors just simply go less to get more interest, and it's working. So we have a lot more offers going in. Not every property. I think it's very specific to the major urban centers. I think what you get in Kitchener, Waterloo, London, you're probably seeing that a little bit more with multiples. And then you get a little bit further out. I'm just talking generalities, folks. I know there's going to be one-offs here and there, but you get a little bit further outside of those major urban centers, and you're maybe seeing less of that. Maybe 1 or 2 offers-ish. Because we still have things sitting on the market. Our months of inventory is still 3.5, which technically is still a buyer's market. We're just not used to it. So if you're a first-time home buyer, you're gold. You are what everybody wants because you don't have a house to sell. You can just come in and buy the house and close. We're good. People who have a house to sell, more and more conversation right now around, can we get away without a sale of buyer's property clause where you got to sell your house before you firm up on the purchase? Or, hey, Steven, can we afford both homes while we wait for our house to sell? Have a lot of those conversations right now. So in the market in general, we're just seeing more buyers. More buyers are coming off the sidelines. We are definitely seeing more buyers come out. They're getting excited. I'm seeing them come across my desk and they're getting ready to look at buying. So if you're selling, you gotta have a really good conversation with your real estate agent. Is this a good time to do it? What can we sell for? Forget the list price. What are we actually going to sell for? How long are we going to take to sell? Especially if you're buying something, gotta have that conversation and include your mortgage agent as well, because they need to know what's going on. How many times have we seen that? You forgot to tell the freaking mortgage broker, guys, whoa, like we're the gatekeeper between you and the money. We should be your first phone call. So that's what we're seeing right now, buyers and sellers. A big difference in strategy by real estate agents. And it'll be interesting to see how this evolves. Because the other thing I'll say, yes, there's more first-time homebuyers coming off the sidelines right now. But I'm also noticing that as I said, they're looking around a lot more. Actually, I don't think I said that. We are noticing first-time homebuyers are looking around a lot of inventory to look at. They're being very picky, which can be good and bad, especially with rates moving the way they are. Comes back to that earlier thing I said, lock something in, protect yourself, but then don't take 8 months to find something. Yes, it is your biggest purchase. Yes, take your time, do your due diligence. You can go paralysis by analysis, though, right? Because I'm starting to hear some of them, and I guess rightfully so, they're getting a little bit worried, right? War, gas, jobs. Okay. So, if you're a first time home buyer, you've got a really good opportunity. As I've always said, I'm not saying run out and buy, got to buy right now. Holy crap, best time to buy. Go, 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 go. When you're emotionally ready, when you're financially ready, if it makes sense, buy a damn house. It's really, really simple. Okay. One more thing that I want to address. Just going through my notes here, folks, making sure I didn't miss anything. Nah, that's pretty much it. Okay. So I hate to end the podcast on a bit of a downer, but I want to talk about tough scenarios that I've run into and maybe how you have to handle them. So, two scenarios I just had this past week that I've run into, and I want to tell you what happened and if it happens to you, how to deal with it. So, scenario number one, I had a client call me, did a mortgage for them a few years ago, and he called me and said, "Steven, I lost my job today. What do I do?" Now, we all know that. So, married, kids, the whole bit. We all know that most households need two incomes to be able to afford a mortgage and gas and life and everything. And my first comment, because his first question to me was, "Can I skip payments?" And I said, "Yeah, the lender that you have allows one monthly payment to be skipped." But I said to him, "Call up the lender. Be straight up. I lost my job. I'm in a field where I can definitely find another job. I want my 1 month skip payment. I'm being upfront with you right now. I've never missed a payment. I've got great credit. I need some help. Do I have an option? Maybe skip 2 months, 3 months." I would say get in front of it. Let them know. And if they say no, take your 1 months in this case, take your 1 month skip payment, and then you can strategize. At least then you know what you're up against. Don't wait. And I know it's tough. It's tough to call and say, "Hey, I lost my job." But that's happening, right? All the things I talked about at the beginning of the podcast with inflation and expenses, that's another thing. Businesses will have to cut back, right? If we're not selling, so people aren't buying, and we can't spend money to grow business. It's very simple. Businesses are going to have this issue. And then you throw on top of that the AI thing going on. A lot of employment and jobs are going to be replaced by AI, or automation will be replacing jobs as well. So my comment is on that, get ahead of it. Okay, don't let it linger because it's stressful. It's not good. So the other scenario I've run into a couple of times. Clients are in a certain situation. Uh, I had one where there was a cohabitation situation. Best friend bought a house a few years ago, 5, 6 years ago, actually, 5 or 6 years ago, actually. And now they want to sell. They've met somebody special. Each one of them, they want to move on. Well, the mortgage is larger than the house value. They're underwater before selling. They're underwater quite a bit, and they don't have the cash to cover it. So remember, if you sell a house and you don't have enough equity in the home to cover your debts, realtor fees, all the other stuff that comes up, well, you technically can't sell the house. You're in default. It's not if default's the right term, but you can't sell your house. So in this case, and that was one case, and the other was just a family that wanted to move, but they couldn't. They were underwater as well, or they were break even. They were break even. So In this case, if your house is, quote, underwater, so the debt obligation against the asset is higher than the value of the asset, two options, really. Keep the house, ride it out. If you're making your payments, the bank's not gonna care. They're making interest off you. They could care less. Now, if you go to refinance or whatever, then yeah, they're gonna care because they can't give you more money against a depreciating or an asset that's dropping in value. Renewal, they're not gonna care. As long as you haven't missed any mortgage payments and you're in good standing, they're not gonna care what the value of the house is. They don't want your house. I joke with clients, the bank wants to bleed you dry and collect interest off you nonstop. So they're not gonna stop you from making payments. The other thing you could do, which I'm not saying you should do this necessarily, but if you've got money saved up to buy another home, you could rent out your home that you're in right now and then buy another one, and you can go less than 20% down on the second home as long as you can afford it. Now, I'm not saying run out and do that because I think you have to be okay with being a landlord, having a tenant. You become a freaking landlord. So I'm not saying you got to do it that way. I'm not there. It's just that's another option. If you got to move on with your life and you have the money saved up and it makes sense, again, get advice from a freaking professional. All right. Don't let someone at a bank or whatever just say, oh, it's a great idea. Go for it. No. Here are the things you need to do to prep and make sure it's the right thing for you. And you need a strategy here. Okay. Are we going to keep this house? How long are we going to keep it? Because here's the thing in Ontario, anyway, you move a tenant into that property, you can't get them out. I know there's ways to try, but good luck. So, anyway, those are, sorry to end the podcast on not, as I say, rainbows and lollipops, but those are two scenarios I ran into. And it takes the advice of a professional to help. And get out in front of it, folks. Don't let it linger. Don't let it what is the biggest cause of divorce? I think it's money. Throw in the comments if I'm right or wrong on that, but I think it's money. And I get that. I can appreciate that. Okay. Well, that was enough positivity for today. Let's kind of move on. All right, that's it. We're wrapping this bad boy up. We're almost at over half an hour of nothing but fantastic, great, wonderful news. So excited. Okay. You know the drill. Like me, love me, follow me, desire me, whatever. 5 stars gives me a huge boost. Give me the love. I need the love. In times like this, as a mortgage broker, I need your love. Give it to me. All right. Till next time, goodbye. Reach out if you have any questions. Don't wait too late. Lock your gosh dang rate. The end.